The US auto market is witnessing one of the most shocking plot twists of the decade, and it's happening faster than anyone expected. Jeep, Dodge, and Ram, three of America's most iconic brands under Stellantis, are suddenly facing a sales meltdown so severe that dealerships are panicking, incentives are exploding, and executives are scrambling to explain what went wrong. Meanwhile, Toyota dealerships can barely keep SUVs on the lot as demand skyrockets to record-breaking levels. This shift isn't just dramatic, it's historic, and it's catching the entire industry off guard. For years, Jeep, Dodge, and Ram ruled the roads with aggressive styling, raw power, and loyal customers who wouldn't even consider shopping elsewhere. But now, consumers are walking away in huge numbers. Inventory is piling up so fast that dealers are running out of space, parking trucks in overflow lots, and begging Stellantis for relief. Some locations report 120 to 150 days of unsold stock, a nightmare scenario that means vehicles are sitting for months, losing value every single day. And with interest rates crushing budgets, buyers simply aren't willing to pay top dollar for trucks and SUVs that haven't been updated or improved in years. At the same time, Toyota is doing the exact opposite. While Jeep, Dodge, and Ram fight to move metal, Toyota is experiencing a surge in SUV demand so intense it feels like a tidal wave crashing through the market. The RAV4, Highlander, 4Runner, and even the brand new Land Cruiser are selling at speeds that shock analysts. Some dealers report buyers placing deposits before shipments even arrive. Toyota's reputation for reliability, efficiency, and long-term value is paying off massively, especially as American brands continue raising prices without offering fresh features or better quality. What makes this meltdown even more unbelievable is how sudden the shift is. Just a year ago, Ram trucks were flying off lots, Jeep was considered untouchable in the SUV segment, and Dodge had some of the strongest brand loyalty in the country. But consumers are fed up. Reports of rising repair costs, outdated interiors, and questionable build quality are spreading like wildfire online. Owners who once proudly displayed the brand logos are now warning others to stay away, and word-of-mouth damage is hitting harder than any marketing campaign Stellantis could launch. Behind the scenes, Stellantis executives are facing uncomfortable conversations. They're watching Toyota dominate key segments that Jeep and Dodge used to lead. They're watching Ram lose customers to Ford, Chevy, and even Toyota's Tundra. And they're watching dealers slash prices, stack incentives, and offer massive discounts just to get cars off the lot. It's a perfect storm. And for Toyota, it's the opportunity of a lifetime. But the biggest question now is, how far will this collapse go? Analysts are already warning that if Jeep, Dodge, and Ram can't reverse this trend soon, the long-term consequences could reshape the entire American auto landscape. Toyota is gaining so much momentum that it may permanently take over segments that Detroit automakers dominated for decades. Meanwhile, Stellantis risks losing customer trust faster than they can rebuild it, especially with electric trucks delayed, hybrid strategies unclear, and new models arriving slower than expected. And here's the part nobody saw coming. Toyota isn't just taking market share, it's rewriting consumer expectations. Buyers are prioritizing safety, fuel efficiency, tech reliability, and long-term cost instead of raw horsepower or bold styling. It's a shift that Stellantis failed to anticipate, and now they're paying the price as Toyota's SUVs surge to the front of the pack, leaving competitors scrambling to catch up. Toyota's momentum is so strong that even vehicles considered old by industry standards, like the 4Runner, are selling at levels no one can explain. A 15-year-old platform is outselling brand new Stellantis SUVs with modern styling and bigger engines. That's not just a sales trend, that's a signal. Consumers want durability. They want vehicles that last hundreds of thousands of miles without breaking the bank. Toyota delivers that reputation every single time, and now the entire industry is feeling the pressure as buyers shift their trust toward brands that have proven reliability, not just flashy marketing. Meanwhile, Jeep is stuck in a dangerous cycle. The Wrangler and Grand Cherokee, once the crown jewels of the SUV world, are losing momentum fast. The Wrangler's price hikes, combined with rising maintenance issues, have pushed buyers toward alternatives like the 4Runner and Bronco. And the Grand Cherokee, a vehicle that used to dominate suburban America, is now sitting on lots, while Toyota's Highlander and Grand Highlander disappear within days. Even Jeep's hope for revival, the Wagoneer, isn't performing as expected, with inventory stacking up like never before. Dodge is in an even more precarious situation. With the Charger and Challenger discontinued during the transition to electric platforms, the brand is essentially living through an identity crisis. Buyers are confused, dealers are frustrated, and the new electric muscle lineup isn't generating the hype Stellantis expected. Without affordable, reliable, fuel-efficient options, Dodge is losing customers who are migrating straight to Toyota and Honda, brands that have clearly figured out what middle-class buyers want in today's high-cost economy. But perhaps the most dramatic collapse is at Ram. The truck market is ruthless, and for years, Ram was the only real challenger to Ford and Chevy. But the momentum is gone. Reliability complaints, rising prices, and a lack of fresh innovation have pushed buyers to alternatives. Toyota's Tundra and Tacoma are seeing explosive growth, especially with hybrid models that deliver power and efficiency without sacrificing long-term dependability. And with Ram still trying to figure out its electric truck strategy, Toyota is capturing truck buyers who never even considered switching brands before. This shift doesn't just affect sales charts, it affects the entire ecosystem behind the scenes. Suppliers are adjusting their production schedules, dealers are rethinking lot orders, used vehicle values are shifting, even rental companies are dropping Stellantis products due to maintenance expenses and customer complaints. Meanwhile, Toyota's factories are running near maximum capacity as shipments are sold before they even reach dealership floors. What's even more shocking is how quickly consumer confidence has flipped. Online forums, review sites, and social media threads are filled with stories from former Jeep, Dodge, and Ram owners who feel disappointed or betrayed by quality issues. And when these stories spread, potential buyers hesitate, and Toyota steps in to grab the opportunity with rock-solid reliability scores and consistent customer satisfaction ratings. This organic shift in public perception is something Stellantis can't fix overnight, no matter how much money they pour into marketing. And the shocking part, we're still just at the beginning of this market upheaval. Toyota's lineup for the next 2 years looks stronger than ever, with new hybrids, revamped SUVs, and next-gen off-road models ready to dominate their segments. Meanwhile, Stellantis is facing recalls, slowing production, and major uncertainty about how to rebuild trust in brands that once defined American roads. Industry analysts are now warning that if Stellantis doesn't act immediately, this sales collapse could snowball into something far more serious. A long-term brand erosion that takes years, not months, to reverse. And the data backing this warning is alarming. Customer trade-ins are shifting dramatically toward Toyota, meaning once loyal Jeep, Dodge, and Ram owners aren't just browsing the competition, they're jumping ship entirely. Every time that happens, Stellantis loses not just a sale, but a customer for potentially a decade or more. That kind of loss hits deep, and it's nearly impossible to recover without a major reinvention. Dealerships are the ones feeling the pain firsthand. Many Jeep, Dodge, and Ram dealers are quietly admitting they're overloaded with inventory they simply can't move. Some are calling it the worst stock backlog they've seen in years. Rows of unsold trucks are sitting at the edge of the lot, dusty, untouched, and dropping in value every week. To make matters worse, dealers are forced to stack incentives, cash rebates, financing deals, loyalty bonuses, anything to lure hesitant buyers, even though profits are shrinking. The irony is brutal. While Stellantis dealers are slashing prices just to survive, Toyota dealers are doing the exact opposite and still selling out. And here's the twist that's keeping competitors awake at night. Toyota hasn't even unleashed its biggest weapons yet. The upcoming next-gen 4Runner is expected to explode in demand the moment it launches. The new Land Cruiser is already becoming a sensation before full production even ramps up. And Toyota's hybrid strategy, smooth, reliable, affordable, is connecting with buyers far more effectively than EV-only strategies pushed by other automakers. Consumers want choice, not pressure, and Toyota is delivering exactly that. Meanwhile, Stellantis is caught in a confusing identity battle. Their EV announcements feel uncertain, their hybrid lineup is barely competitive, and their gas-powered models are aging fast. Customers aren't seeing clear direction, and confusion breeds hesitation. When buyers hesitate, they walk away, and Toyota picks them up instantly with product lines that feel simple, trustworthy, and built for the long haul. In the background, supply chain insiders say Toyota's disciplined manufacturing is giving them a massive advantage. Their factories run like clockwork with fewer delays, fewer defects, and better quality control. Stellantis, on the other hand, has been dealing with quality complaints, production pauses, and recall waves that scare both customers and investors. Toyota's consistency is making Stellantis' weaknesses look even bigger, and the gap between the brands is widening faster than anyone expected. But the most stunning development is how younger buyers are reacting. Millennials and Gen Z, who once flocked to Jeep and Dodge for their bold designs and adventurous image, are now leaning toward Toyota because of long-term value and lower ownership costs. This generational shift is critical. If Stellantis loses these younger customers, they lose the future of their brands. Toyota, however, is locking in lifetime buyers by offering vehicles that hit the sweet spot between affordability, technology, and dependability. And shockingly, this collapse isn't slowing down. It's accelerating with every new sales report. Every new month brings an even steeper decline for Jeep, Dodge, and Ram. And analysts are stunned at how quickly the slide is unfolding. What used to be minor dips in sales have turned into massive double-digit drops, the kind that set off alarm bells inside corporate boardrooms. Meanwhile, Toyota's SUV and truck demand continues to rise like a rocket with no signs of slowing down. It's not just one or two models doing well, it's the entire lineup from compact crossovers to full-size SUVs. This widespread surge reveals something far deeper than just a trend. It shows a fundamental shift in what American buyers want, and Stellantis is nowhere near catching up. Another factor making this meltdown even worse is customer retention. Stellantis' retention rates have plunged as people trade in their aging Jeeps and Rams for brands that promise fewer problems and more value over time. Toyota's retention, on the other hand, has become almost legendary. When a family buys a Toyota SUV, there's a good chance they'll come back for another, and then another. This cycle creates a loyal customer base that grows stronger every year, something Stellantis desperately needs but can't rebuild overnight. And while Stellantis struggles to maintain momentum, Toyota is capitalizing on every weakness. When Jeep suffers a recall, Toyota swoops in with reliability banners and dealer events. When Ram delays its electric truck debut, Toyota pushes hybrid trucks with proven technology. When Dodge hesitates on redesigns, Toyota rolls out refreshes and new trims that keep customers excited. This isn't just competition, it's a strategic takeover happening in real time, and Stellantis appears powerless to stop it. Inside Stellantis' headquarters, sources say the pressure is reaching a boiling point. Executives are reportedly demanding rapid change, accelerated development, and aggressive pricing strategies. But the reality is this: designing, testing, and releasing new vehicles takes years. Fixing brand reputation takes even longer. Stellantis simply can't match Toyota's pace right now, no matter how urgent the situation becomes. And dealers know it. Many are preparing for a rough year ahead, bracing for slow sales, shrinking margins, and unpredictable market shifts. What's even more devastating is the impact on resale values. Jeep and Ram used to be known for holding their value better than most competitors, but the current oversupply and declining demand are crushing resale prices. Used models are sitting longer, selling for less, and costing owners more in long-term depreciation. Toyota, meanwhile, is enjoying some of the strongest resale values in the entire industry. In some areas, lightly used Toyota SUVs are selling for nearly the same price as brand new ones due to overwhelming demand. That kind of value gap is fueling Toyota's momentum even more, pulling undecided buyers firmly in their direction. As this divide between the companies widens, a new reality is becoming clear. Toyota isn't just winning, it's dominating. And Stellantis isn't just struggling, it's unraveling. From product planning to marketing, from manufacturing to customer service, Toyota's precision is exposing Stellantis' weaknesses at every level. And with each passing quarter, the consequences for Jeep, Dodge, and Ram grow more severe. And the most shocking part, analysts say the real crash hasn't even hit yet. They warn that if upcoming quarterly numbers continue this downward trajectory, Stellantis could be forced into drastic measures, massive production cuts, dealership restructuring, incentive programs that eat profit margins, and even the cancellation of slow-moving models. These are the kinds of emergency actions automakers only use when they're staring down a long-term decline, not a temporary slump. And right now, all signs point to a structural collapse, not a seasonal dip. The foundation of Jeep, Dodge, and Ram's market dominance is cracking, and Toyota is widening those cracks cracks with every vehicle it delivers. Suppliers tied to Stellantis are also starting to feel the shockwaves. Some parts manufacturers are already reporting reduced orders, signaling softer demand for upcoming production cycles. This ripple effect threatens jobs, contracts, and manufacturing stability across several states. Meanwhile, suppliers partnered with Toyota are expanding shifts, ramping up output, and preparing for what looks like years of sustained high demand. This imbalance is yet another clue that the momentum shift in the auto market isn't temporary, it's transformational. What makes the situation even more intense is how quickly buyer psychology has changed. Consumers today are researching more, comparing more, and trusting their wallets over brand loyalty. When they walk into a dealership and see a Toyota selling near MSRP, while a Jeep or Ram sits with $8,000 to $12,000 in discounts, they automatically question why. And when they dig deeper, reading owner reviews, checking long-term reliability scores, watching breakdown videos, the answers become painfully clear. The perception gap between Stellantis and Toyota is growing at lightning speed, and perception drives purchasing faster than anything else. Social media has amplified this shift even further. It only takes one viral post about someone's 300,000-mile Toyota or a nightmare Ram repair bill to influence thousands of potential buyers. TikTok, YouTube, and Instagram are flooded with real owner experiences that paint a very different picture than Stellantis' advertisements. Toyota doesn't even have to defend itself. Its customers are doing the marketing for them. Meanwhile, Stellantis brands are fighting back against a wave of negativity that spreads too quickly to control. Inside dealerships, salespeople can feel the shift in real time. Some report that customers no longer ask about Jeep or Dodge first. They ask about Toyota availability. Others say they only sell Stellantis models when the discounts are so deep the deal becomes impossible to refuse. That's a dangerous place for any automaker to be, because once a brand becomes the discount brand, it's incredibly hard to climb back up to premium pricing or rebuild lost trust. And while Toyota grows stronger, they're not just sitting back. They're preparing an even more aggressive push. New hybrid engines, updated off-road trims, refreshed interiors, and more efficient platforms are all set to roll out. Toyota is tightening its grip on the SUV and truck market with strategic precision, aiming to secure the next decade of dominance while competitors scramble to react. But the real shocker is this. Industry insiders believe Stellantis may not even realize how deep this problem goes. Some executives are reportedly blaming market conditions, interest rates, or customer budgets. But Toyota is thriving in the exact same market under the exact same economic pressures. That means the issue isn't the economy, it's Stellantis' product strategy, pricing, and long-term vision. And unless something changes fast, this collapse is only going to accelerate. Dealers are quietly saying what executives won't. Stellantis underestimated how fast the market was changing. For years, Jeep, Dodge, and Ram relied on brand image, big engines, and aggressive styling to keep buyers hooked. But today's customers want practicality, efficiency, reliability, and long-term value. Exactly the areas where Toyota excels with laser precision. And as these priorities shifted, Stellantis didn't shift with them. Now they're paying the price in the most painful way possible. Shrinking sales, growing inventory, declining loyalty, and collapsing resale values. Meanwhile, Toyota's strategy looks almost effortless from the outside. Instead of chasing trends or forcing customers into full EV adoption, Toyota doubled down on what actually works: hybrids, durability, intuitive tech, and consistent quality. While Stellantis struggled with recalls and redesign delays, Toyota focused on refinement. While Stellantis raised prices aggressively, Toyota kept increases moderate. And while Stellantis introduced risky new models, Toyota updated proven platforms and expanded beloved nameplates. That steady, disciplined approach has turned Toyota into an unstoppable force in the SUV and truck segments. The most dramatic example of this shift can be seen at auctions and wholesale lots. Fleet buyers, rental companies, and commercial clients, groups that track long-term costs down to the penny, are increasingly choosing Toyota over Stellantis. They're prioritizing lower maintenance costs, fewer warranty claims, and stronger resale outlooks. This is devastating for Jeep, Dodge, and Ram because fleet sales often keep factories running and help stabilize production numbers during slow retail months. Without strong fleet demand, Stellantis faces an even bigger uphill battle. And then there's the technology gap. Toyota's hybrid systems have been refined for over 2 decades, delivering outstanding efficiency and bulletproof reliability. Stellantis is still trying to catch up with plug-in hybrids that cost too much, deliver inconsistent performance, or require premium pricing that buyers won't accept. While Toyota's hybrids are selling faster than they can be built. Stellantis electrified models sit unsold because customers don't trust newer, unproven technology paired with brands already dealing with quality concerns. But perhaps the biggest warning sign is coming from market research firms that monitor long-term brand health. Their reports show an alarming decline in how consumers view Jeep, Dodge, and Ram. Words like unreliable, overpriced, dated, and expensive to maintain appear with increasing frequency. Meanwhile, Toyota's perception metrics are skyrocketing with terms like dependable, high resale value, low maintenance, and built to last. When brand perception moves this sharply, it usually signals a shift that can take a decade to reverse, if it can be reversed at all. And as these trends collide, one thing is becoming unmistakably clear. This isn't just a sales slump, it's a full-blown market realignment. Toyota's dominance is now reshaping buyer expectations, dealership operations, and even the future product plans of competing automakers. Stellantis, on the other hand, is fighting battles on every front, from quality control to customer trust, from innovation delays to rapidly shrinking market share. And the most unsettling part for Jeep, Dodge, and Ram: industry experts say the storm that's hitting them right now is only the beginning. If Stellantis wants any chance at recovering, it needs to move faster than ever before. That means accelerating redesigns, fixing long-standing reliability issues, and offering realistic pricing that matches what today's buyers expect. It also means creating a clear roadmap for hybrids, EVs, and next-generation SUVs that can stand toe-to-toe with Toyota's lineup. Because right now, Toyota isn't just winning, it's rewriting the rules of the entire market. And unless Stellantis responds with bold, decisive action, Jeep, Dodge, and Ram could see their market position shrink even further in the years ahead. But for Toyota, the future looks brighter than ever. Demand is exploding, customer loyalty is unmatched, and upcoming models are poised to dominate every key segment. If their momentum continues, and all signs say it will, Toyota could become the uncontested king of SUVs and trucks in America, leaving competitors scrambling to catch up. This shocking meltdown is more than just a headline. It's a turning point, a moment the auto industry will look back on and say, this is when everything changed. Jeep, Dodge, and Ram are at a crossroads, and Toyota is racing full speed ahead, capturing the buyers, the trust, and the momentum that will shape the next decade of the automotive world. And as the dust settles, one question remains: can Stellantis still fight back, or has Toyota already secured the future? Thanks for watching, and stay tuned because this story is far from over.